Vikas project, Anand Agricultural University, Anand. I feel privileged to extend my warm welcome to all presented here for a special guest lecture on future of dairy commodity trade, a post-pandemic scenario. Now, I would like to invite Dr. R.S. Kundi, Principal of IABMI College and Principal Investigator of NAHEPCA's project, Anand Agricultural University, Anand, for welcome address. Over to you, sir.
So, Shraddha, I think there is some technical problem, it seems to me. You are not audible. Anyway, you want me to say a few words? Shraddha?
I think Kundi sir, you can continue, right?
I think Dr. Samit, there is some problem. Can I say something? You expect me to say a few things?
Yes,
okay,
sir,
okay. Am I audible?
Yes.
Okay, fine. Thank you, Shraddha. Thank you. And first of all, in this lecture series, I would like to welcome our maybe the speakers, today's guest speakers, very important persons, and Mr. Bellamy, Global Dairy Sector Heads, Robobank. Mr. Bellamy, welcome to you to our university. On behalf of our university, Anand Agriculture University, Anand, and our fellow friends over here in the Center for Agriculture Market Intelligence, and on my own, I welcome you, please. And we are very curious, rather excited to listen to you in this very, very important area. For the last 2.5 years, we have a Center for Agriculture Market Intelligence here at our university, and this center is under National Agriculture Higher Education Project of ICR, Indian Council of Agriculture Research, funded equally or on 50-50 share by World Bank. Very, very important sector. So this sector is exclusively working in the area of marketing, trade, basically market intelligence. So we are covering all the areas, important crops and allied activities, which are mainly dairy and food processing, and fisheries, and poultry and other livestock segments. So the most important point is, apart from conducting research in the broad area of agriculture marketing and trade, we are also conducting some training programs, which is very, very important segments, mainly for PG students and faculty members, professors, academicians, policymakers, also to some extent for the farmers. So this today's lecture is a part of capacity building programs in the group of this our food processing and dairy technology, dairy processes. So very, very important for all of us to listen you today, but only few things about this, our sector, though I'm not here to share with you our little understanding, but we are here to listen you today in this lecture. But this dairy sector is most important one in India. You know that we are now #1 and having about touching 200 million metric ton milk production recently, 198 to be specific. 25% is only organized and rest is unorganized. This is the characteristic of these sectors here. And we are looking to trade, and trade means now the whole globe is a village, is a market, common markets, and we see the quality and we see the measures, the competitive measures, and we are having number of parameters on which we have to compete. The most important point is when we compete, you compete with the markets like in the European Unions, then you have to see the quality, very, very important parameters. And you are a man expert in commodities, so you know the quality is very important today, in today's times. So apart from having this WTO kind of organizations and following the conditions and other things, in India, we are competitive. We believe that as per many studies, Indian dairy sector is competitive in international market, in spite of the fact that our productivity of the animal is very low compared to developed countries. But we have to address many issues like quality issues, so which are very, very important. The policy decisions of the government or support from the government of India is remarkable, at least in the recent past, through infrastructure development funds and other kind of things and the policies. So the sector, you can say, if you see, because you'll be speaking, addressing the issue of pandemic, before pandemic, thereafter, even this sector has not been much affected from pandemic as far as this production and procurement kind of things are concerned, or maybe the liquid milk is concerned. Though as far as this value-added products are concerned, it has been affected, at least in the initial stage it was. And recently it has, I think, rebounding has taken place, and now again it is on the path of recovery. It's very, very important. So this dairy sector is very important for all of us, for India, as far as this livelihood is concerned, and as far as the other thing, trade is concerned, the most important sectors. we are here not saying much. These are a few things, general things to you. And once again, say I will.
Sir, your voice is also breaking up. Just can you off the video?
Yes, you are saying something, Dr. Samit. Yeah.
Your voice is also breaking.
These words, I welcome you once again, and all my colleagues, Dr. Samit, Dr. Makwana, Dr. Lad, Shraddha, and Devang, Dr. Gujars, as well as all the participants in this.
Okay. Do you like me to continue?
Dr. Makwana, can you hear me?
Yes, yes, sir. I will.
If there is some problem, you please ask maybe the Smith.
Good afternoon, everyone over here, and good morning to our speaker. It's my pleasure to introduce our today's speaker, Mr. Kevin Bellamy, in this particular special guest lecture. With a global exposure to dairy and dairy ingredients of above euro 25 billion spread across 5 continents, dairy and dairy ingredients is one of the most important sectors at Rabobank, the world's leading food and agriculture bank. Mr. Kevin Bellamy leads Rabobank's strategic discussions with many of the largest global dairy and dairy ingredient corporations on a global and local basis. Kevin's expertise comes originally from industry prior to banking. He joined the Rabobank team of bankers and dairy experts in 2011 after previously being the executive director of the Global Dairy Platform, a global consortium of over 60 companies with a collective turnover of over $100 billion USD, focusing on collaboration across the industry on key issues affecting dairy demand, sustainability, and marketing. In the past, Mr. Kevin has also been Chief Executive Officer of the UK Milk Development Council and has served on a number of dairy-related boards around the world. Mr. Kevin Bellamy is a Chartered Director and MBA. It's my pleasure to introduce him, and I now hand over the session to our speaker. Over to you, sir. We are very eager to listen to you on this particular important topic. Over to you, sir.
Thank you, Dr. Pandya and Dr. Makwana. And it's a great honor to be invited to give this lecture this morning. Hopefully you can see my screen. I've prepared some slides for this morning. Can you now see them? Can I just check?
Yes, sir.
It's perfect. It's perfect.
That's great. Thank you. So, yeah, thank you for the invite this morning. As Dr. Makwana said, my name is Kevin Bellamy. I work for a Dutch bank called Rabobank, which has probably the largest exposure to the dairy industry of any bank worldwide. We have about $25 billion lent to the dairy industry, and I'm the head of the dairy sector for the bank. But we also have a significant research team, which I led for the first few years at my bank. So my history is more research than banking. And it's good to be talking about the developments in the dairy sector this morning. And Dr. Makwana asked me if I'd talk about the outlook for dairy trade, but as a post-pandemic view of the dairy trade. And we'll cover the short term and the long term, but post-pandemic is interesting. As Dr. Pandya said, there is relatively small impact of the pandemic on dairy, but there will be continued impact. Inflation is becoming a big factor in the world economy. Logistical problems we'll look at. Trade tensions are developing between China and the US. Climate issues are coming to the fore, and demographic changes are happening. So we'll look at the outlook for dairy trade, certainly post-pandemic, but pandemic has not been the the major impact here. So my agenda today is to briefly cover the main trade routes and what the drivers are and the pressures on world dairy trade. Look at the short term and the current outlook and developments this year, and then look at some of the medium-term drivers of change and hopefully provide a medium-term dairy trade outlook of what's happening in the world and what we think will be happening in the future, and then hopefully draw some conclusions from that towards the end of the lecture. I think as a starting point, trade in any agricultural product, as you'll be aware in your studies and work, is always complex. For exporters, you need the ability to produce a surplus, and that involves a suitable climate, a suitable political and economic environment, and also a history of development of production. And for dairy, as a perishable product, all of those things are overlaid by the fact that trade and transport of the product is always going to be difficult. For importers, then the limited ability to become self-sufficient is obviously a driving force. If you can't produce at home, you need to import. But also the desire to have a good quality source of protein, and particularly animal protein, as people become more affluent around the world, is a key driver. Often it's dependent on historic and cultural reasons for consumption of milk. Asians do not have a history of consuming milk, but have a growing desire through globalizations of diets to get hold of milk. Demographics is a key driver, as particularly growth of babies and infants in a market will drive dairy consumption. And the tariff barrier regime as to how willing a government is to let dairy into a country will also have an impact. So these are complex issues, not just driven by supply and demand. And that means that to date, dairy trade has really been quite limited. It's not surprising, perhaps, that only about 10% of the world's milk volume are traded across borders. Typically over the last century, protectionism on foodstuffs in markets has been a lot higher. And it's taken a while for globalization to take place. European production, for instance, has been limited by milk quotas, where Europe has wanted to hold its dairy prices above the world market equilibrium in order to maintain its food production on the ground and support farmers in rural regions at the same economic level as urban regions, people living in urban regions. In North America, protectionism in Canada, USA's focus on its home market has meant less interest in export. And it was only really after New Zealand removed its subsidy and support system for farmers in 1984 that their growth in interest in exports became apparent, as people realized that New Zealand was a very good place to produce milk cheaply and could produce milk for the world market and begin to dominate the world trade with a very low domestic market, a low consumption at home. So really it wasn't until the early 2000s that the demand side began to develop, and you got growth in Southeast Asia as an importer, perhaps with the exception of Japan and Korea, who got the milk drinking bug at the end of World War II with the American occupation. And it's also really been driven over the last 10 to 15 years by growth in disposable incomes and people's wish to have a more animal protein and better quality protein within their diet. And of course, growth in dairy trade has been slow because it takes time to build export capacity. Building export capacity either means introducing new land, which is expensive, or increasing cow yields from genetic progress, which happens at about 1 to 1.5% per year. So it's taking time to grow, but as you can see from the chart on the screen now, there is a continued growth of somewhere between 1 and 3% a year in dairy trade around the world. And if we look at where that trade is taking place, to the graph on the left there shows how China has come to dominate world trade, and certainly during and since the peak of the pandemic, it's been particularly China that has moved from a just-in-time import of dairy products to a just-in-case, and built up significant inventories during 2020 and early 2021, which will need to be eroded. But we don't see any lack of appetite from China at the moment. The other growth over the pandemic period has perhaps been North Africa, particularly Algeria, where government buying has also increased over the period. And really this echoes Dr. Pandya's comment at the start that the pandemic hasn't much affected the traffic in world trade in dairy. Demand and supply has remained much more stable than we expected at the beginning of 2020. If you look at the chart on the right-hand side, dairy as a perishable product means that fluid milk is very difficult to ship around the world. Perhaps the exception to that is UHT milk becoming much more in demand from China coming out of Europe. But the vast majority of world trade is in powder products, or some cheese and some butter. And you see that the exportable products there are skim milk powder and whole milk powder. Still less than half of the world's production being traded over borders, but are produced for trade as tradable products. If you look at products like cheese and butter, much more produced for the local market, but produced as with surpluses in those local markets being exported and put up for sale overseas. Interesting to look at Mexico on the right-hand side there. Mexico, the big export destination for the USA's surplus, really suffered in 2019, late 2019, early 2020. The border was closed for a while, but you can see that even then export demand has recovered, and most of the trade has continued to take place. Interesting also to see that Australia appears in the top 10 regions for export destinations. Australia is generally seen as an exporter itself, but has become an importer of cheese and powder for its domestic market. So if we look at where exports are going to take place from, because of climate and because of the evolution of the dairy industry and the genetics of the high-yielding dairy cow, most of those cows are living in temperate regions, places where you can produce forage easily and you can increase cow yields. So we see that the main production regions are Europe, the USA, Oceania, and Southern South America in Argentina, where those climatic conditions are broadly similar. And you can see that Europe's production, Europe more than self-sufficient in dairy, has increased in recent years since it's removed its quota system, which limited production growth for 30 years. and now exports about 15% of its total production of dairy, looking to increase its exports to world markets. USA also growing. The prices in USA over the last couple of years and subsidies from governments have meant that supply has been growing over the last couple of years, and now exports about 15% of its production. Argentina, relatively big exporter in the region, but South America tends to be, countries in South America tends to have a net deficit in dairy, and particularly the Argentinian supply satisfies local demand. So the transfer in or out of South America tends to be relatively marginal. And then Oceania, where New Zealand, the major exporter, very small population in New Zealand, just above 4 million, but a very good place to produce milk cheaply, and therefore 95% of the supply will be exported. And Australia, which has a larger domestic population, and really has struggled over the last couple of years, still exports about 35% of its production, but really struggles over the last couple of years getting the pricing between domestic demand and export markets that tend to be more volatile, and has become a more marginal exporter over the last couple of years. Also had some drought issues. If we look at that, it's not surprising then there's just a few key trade routes. And starting at the left-hand side and working across the world map, USA has become a net exporter, but a relatively recent net exporter. Most of the focus on the USA market has been internal, producing for the 350 million consumers they have there. And exports have been very much an afterthought. It's very much disposal of market surplus. As their production grows, and USA is one of the regions in the world that has enough land and environmental resources in order to continue to grow its dairy production, that will grow. But at the moment, the difference between USA and Europe will be just the amount of destinations they're exporting to. USA will have much fewer destinations to export dairy to because it's much more of or come from a much more of a surplus base. If you look at Europe, Europe's had a longer time. Many more dairy traders exist in Europe, and many more destinations have developed. So if you look at flows across the Atlantic, cheese and butter flowing into the US, interrupted over the last couple of years by a dispute between Boeing and Airbus on aircraft subsidies, which have put a 25% tariff on cheese and butter going into the US from Europe. The Biden administration's now suspended that, and Kerrygold out of Ireland, the butter brand out of Ireland, continues to grow and has remained, even through the high tariff periods, the second biggest butter brand in the US. Second major export route out of Europe is down into Africa, and particularly a lot of low-value product, low-value powders, skim milk powders, and fat-filled milk powders with a different fat source, going into either North Africa or West Africa as an export route. Difficult to produce milk in those regions because of the climate. Third export route out of Europe has been cheese into Asia, particularly into Japan and Korea under tariff agreements. And what is growing is the supply of powders, and particularly UHT milk, liquid milk, going out of Europe in pre-packed form into China. Europe also used to have a major cheese route into Russia, with about 30% of Europe's cheese going into Russia. Since 2014, with the embargo over the Ukraine, that's not been possible, and that's been replaced by a route out of Belarus, which is still seen as part of Europe, although not part of the European Union, really stepping up to fill in that gap with a major export of Belarusian dairy products into Russia. And finally, the other major major export route that we have in the world in terms of the key trade routes is out of New Zealand and into China, with whole milk powder being exported into China. Australia also has some routes, but since the issues over whether it's an export country or whether it's a domestic country have come to pass, Murray Goulburn, the key co-op there, collapsed. And they've also had some climatic pressures making milk production more difficult. That's become a more sporadic exporter. So let's look briefly at the current outlook and developments in 2021 and 2022. So looking at the world economic situation, first of all, which is a key driver of dairy demand. The COVID epidemic is said to be past its peak, but it's still unsure what the outlook is going to be and how many new waves there's going to be and where those are going to affect, which countries those are going to affect, and how fast vaccine rollouts will affect that. So the outlook, we would still say, is pretty unclear from a trade point of view. Certainly, there's been huge government support in terms of economic packages, really driven by governments thinking around the global economic crisis of the early 2000s. And those huge government support packages have had an effect on the economy. We're seeing that in 2021 as the economic rebound in terms of global domestic products continue to create economic improvement. You see that we're forecasting in 2021 a gross domestic product growth for the world of 5.6% as a bank. But that's pretty unevenly spread. Interesting that India has the biggest economic bounce at 9.3%, according to our economists. So hopefully you guys will see the benefit of that. But from a supply chain disruption, we've seen relatively little disruption so far from the pandemic. There have been some demand distortions due to that rate of economic recovery, but there hasn't been a real supply shortage here from a dairy point of view. What is happening at the moment is that those government subsidies are going to lead to rapid increase in demand for consumer products. And that's leading to inflation, and it's leading to food price inflation. Dairy as a sector is tending to inflate at less than other sectors. So price inflation is happening more in other food commodities and food groups and consumer foods than dairy. And that will have an effect on pricing ongoing. And the winding down of those government support packages will be unequal around the world, and therefore, again, will have a distorting effect. One of the things we don't know, of course, is what the effect of that escalating debt from the cost of those support packages will be as yet. So for the most part, from a pandemic point of view, dairy has been pretty uninterrupted. And the supply growth story is one that perhaps has a bigger impact short term. So what we're looking at here is a chart that shows production growth in the key export regions from around the world. We take 7 regions. We take EU, US, New Zealand, Australia, Brazil, Argentina, and Uruguay. Brazil no longer really seen as an export region. We just keep it in there for historic reasons. But you can see on the chart the growth in milk supply over the last few years, going back to 2015, and the declines through some of that period in 2016 as the impact of European milk quota removal and the rapid oversupply in 2015 of the market, followed by a drop-off in prices and a decline in production. Since then, we've had mainly growth from the world's dairy producers at varying speed, perhaps, but growth. And that's good because we need that. We need a growth of about 1 to 2% per year just to keep up with population growth. And that's led to that growth at roughly the rate of growth of demand has led to some pretty stable prices in the world market over the last 2 years, even throughout the pandemic. The big fluctuations there have perhaps been from the US, and certainly in 2020, we've had a supply growth due to the support packages put in place by the US government and paid out to dairy farmers. We're seeing that beginning to tail off now. The herd size and number of cows in the US is beginning to fall. And our forecasts for 2022 at the right-hand side there are that supply growth will decline in 2022, and inflation and a slowing of growth in production will put an upward pressure on pricing and have an upward effect on pricing. If we look at short term on global trade in export terms, biggest exporter remains the EU. What we're seeing here is 2 periods. On the outside ring, we're looking at the first half of this year compared to the inside ring of the first half of last year. Slightly less growth coming out of the EU, really because growth in New Zealand benefiting from the boom from imports to China, some slight interruptions through EU logistics and the bounce back of EU demand during 2021 has slightly changed the dynamics between the two. The USA continues to increase as an exporter. And the other key trend in there, just in the middle of the rest of the countries, is you see that UK has reduced from 4% of world trade to 2% of world trade, really as a result of the Brexit change, which happened at the beginning of the year. If we look at where those exports are going, this is going to be a recurring story through the next couple of slides, in that the world is being dominated by China. You can see that over a quarter of the world's exports in dairy are heading towards China. And that's been particularly true in 2021. As I said, they've moved to a higher inventory level. Precaution about whether there will be trade interruptions over the next couple of years have built up stocks in China. We don't see those stocks needing to be eroded very quickly, so we're not panicking about those, but there is reasonably high stock levels being built up, and China continues to be the strongest buyer in most markets. If we touch on the individual product groups that we see traded as commodities in world dairy, then US protein surpluses mean that a lot of the skim milk market trade is dominated by US exporting skim milk powder south to Mexico as an export. Mainly skim milk powder because they've got a strong market for butterfat within the US. And therefore, this is the protein and the carbohydrates being exported as a balancing product in the world market, if you like. And the production growth we've seen in 2020 is now being exported in terms of skim milk powder, which the Americans would call non-fat dried milk powder rather than skim milk powder. The other major export block there is Europe, and most of that powder is heading either into China or into the Middle East and North Africa. If we look at the major importers of skim milk powder, you can see that China is the real dominant importer. Normally Mexico would head that graph, but China has increased its imports of skim milk powder in the first half of 2021 over first half of 2020 by 22%, and by 47%, sorry, to give it a 22% market share. Looking at whole milk powder, these are the exporters of whole milk powder. You can see that New Zealand is the dominant player, and particularly export of New Zealand whole milk powder as a low margin product, using New Zealand's advantage in low cost production to dominate this large trade flow. And New Zealand production really changed in the mid-1980s when they removed their farm subsidies and that forced farmers there to move to a very low cost of production. Most of the cows are fed on grazed grass. There's not a lot of imported feedstuffs into New Zealand to feed these cows. So they're producing milk very cheaply, and they're producing on large scale with very large dryers whole milk powder that they're exporting to China. That is beginning to change. The environmental concerns in New Zealand about dairy from a methane production point of view, from a water use point of view, are causing increases in the cost of production, will limit the production growth, and also importantly limit the capital growth of farms which have delivered the last 20 years of growth from New Zealand. And as the profitability of New Zealand farming falls, what they're trying to do is capture more of the value out of dairy. And you're seeing a lot of focus on groups like Fonterra, who are putting a lot of effort into growing value for money in food service in Southeast Asia, to get away from their dominance of a low margin whole milk powder going into China. So we can expect changes over the next few years to continue to happen there. Less export of whole milk powders from the EU and the US, simply because there's a strong market for butterfat in these regions, strong consumer base, and therefore less use of butterfat for export. Looking at the next major, looking at whole milk powder and where milk powder is going, then China again dominates the market with a 29% increase year on year over 2020. And again, a lot of powders going into the Middle East and North Africa, where more difficult to produce milk locally. But interesting to note that a lot of the regions that traditionally are importers of powders have really been forced out of the market due to China's demand dominance and willing to pay higher prices and to support the price of milk globally. One of the reasons why we're not concerned by those high China inventories is that if China steps out of the market, so many of these secondary importers who've been forced out of the market by the higher prices will step in again and start to refill their inventories and supply chains. And therefore there'll be a buffer to any drastic price volatility. Looking at cheese, then the global the market is really more dominated from a export of surplus, and the surplus here is much more from Europe. I've said at the top there that the European exports have been helped by the UK leaving the bloc, not because these figures haven't been adjusted for the UK, and UK appears as separate in both 2020 and 2021, but leading up to the period where UK has left the bloc. UK is not self-sufficient in milk. Historically, it had a pretty high focus on fluid milk and imported a lot of cheese, particularly from France, but also from Ireland, which is a big exporting dairy region, exporting a lot of cheddar cheese into the UK. As the Irish saw that the UK was going to be a more difficult destination post the UK leaving the trade bloc, they started to invest in developing other markets, and certainly seen growth in other markets, really driven by the growth of food service, the internationalization of diets, and the development of the pizza market. So we're seeing the UK leaving the European bloc has encouraged export markets elsewhere in the world for European players who would previously have sent cheese into the UK. It's interesting to note also that cheese exports really haven't been that interrupted by the pandemic, even though you'd expect a lot of that cheese to go into food service and into the pizza restaurants. And pizzas have been a key factor in internationalization of diets and growth of dairy demand and cheese demand globally. But what we've seen is a lot of that pizza cheese has been diverted either onto ready meals, where if you've got to have the family at home all week and everyone is in lockdown situation, having pizzas that you can just put in the oven once a week has been a popular choice for people around the world, and the amount of ready meals pizzas that have been sold has increased pretty dramatically. But also for takeaway restaurants, where instead of those people buying pizzas as an impulse buy, people have moved towards buying a takeaway for the whole family. And you've seen actually a growth in demand for pizza cheese over the period, rather than a decline as you might have expected early on in the pandemic. The other big impact on cheese is that Russia was a big cheese importer in the early 2000s, really locked out of that market by the effects of the Ukraine boycotts, and had an impact. If Russia returns to the world market, then we will struggle for the amount of cheese that we can produce. So the big importers of cheese, UK remains one of the big importers of cheese, even though it's declined by about 22% as a result of Brexit. Russia importing a lot more cheese from South America and from Belarus. Japan, a really mature market, actually declining a bit in terms of consumption. Middle East, and you can see China appears on the table there, but one of the tables that China doesn't dominate in this in the dairy world, but cheese consumption nevertheless increasing. Of course, where you produce cheese, you also get whey as a byproduct. Therefore, it's not surprising that the two regions that dominate the whey trade are the regions that produce most cheese, that's being the US and Europe. These are whey powders, not whey protein concentrates, not infant formula, not sports nutrition. So this is the trade in the commodity powders, and therefore more dominated by the end use of those whey powders, and particularly in animal feeds. And of course, over the last couple of years, particularly in 2019, so not appearing on this chart, China has been really impacted. In fact, Asia has been really impacted by Asian swine fever, which, although the peak was in 2019, has had various other waves, in fact, another wave in 2021. And that's impacted the demand for whey powder, and we've seen lower protein prices as a result. Market beginning to recover, and this year whey protein prices around the world have been booming, and anyone producing proteins or caseinates has done very well out of the market. Not surprisingly, given the Chinese consumption of pork as an animal protein, China has dominated the world trade for whey, and we see as the recovery from Asian swine fever continues and the recovery from the pandemic continues, and China moves to its just-in-case trading policy, then we've had a very large increase in the amount of whey going into China, and whey demand has increased by about 45% between the first half of this year and the first half of last year. Looking at finally in this section, I think butter. The big surplus in butter really is about trading surplus coming out of New Zealand and Europe, and the reason for that is that when you've got a ton of milk, you can either put it into a dryer and create whole milk powder, or you can create butter and whey, cheese and whey, or you can create skim milk powder and butter. And the flip side of the skim milk powder market is that you get some butter to export. Most of that in these in the European market will go into domestic consumption, but still some surplus to export. And also from New Zealand, where they're making skim milk powder, they have an exportable product. And of course, the European exports heavily driven by the export of butter out of Ireland into the US, where they have the leading brand. Again, in 2021, China has eclipsed Russia, who would normally be the biggest importer of butter fat, and China's imports of butter have again risen by above 20% in the first half of the year. So the story throughout really has been China's growth in demand. I know that your focus is on India, and really I haven't mentioned India a lot in this discussion so far, and really because India has some pretty high tariff barriers to dairy that really set up during the last century to protect India's balance of payments, where India is the largest producer of dairy in the world and also the largest consumer in the world. Any large imports of dairy would have an impact on balance of payments. So as you know, India is not a huge exporter or importer, is the major trade flows over the last couple of years. The exports tend to be exports of surpluses when they arise in the market. The imports tend to be derivatives. The major trading partners of India tend to be either Middle East, North Africa, where supply will become more difficult for them as water shortages begin to really start to impact, in places like Saudi Arabia and UAE, where export of liquids have been banned and the water table has been going ever deeper. Those regions will become strong importers, and the links that India have may become important if India's dairy companies begin to get more of an export focus. And from an import point of view, obviously the whey and the lactose coming out of Europe and to a certain extent the USA, but mainly Europe. When we look at trade, obviously currency can have an effect, and looking at the currency effect, you'd expect currencies to have been distorted throughout the pandemic period, And actually, while they were in early 2020, we've returned to more of the stability. This chart's looking at the two major exports against the US dollar. Dairy tends to be traded in US dollars around the world. So if there's a difference between the rate of change of the two other exporters, then you can get a competition advantage. Certainly that was the case for New Zealand in 2020, where New Zealand currencies tended to stay stronger than the US dollar or the European euro, just because of the pandemic not having such a great effect. That's begun to disappear now, and you've seen a return to more stability. The US dollar has strengthened back after the inoculation campaign, and New Zealand's lost its advantage. No real impact apart from perhaps an advantage in New Zealand exporting into China during the first half of 2020. If we look at the volatility of currencies of the major importers, then certainly the official rates in China would suggest that there's been relative stability in the economies throughout the period. Mexico is probably the one that suffered most, and still not quite returned to the pre-pandemic levels, and therefore has found dairy more expensive in the market. But volatility there is receding as well, and we don't expect too much in terms of currency effects in the next couple of years, apart from the inflationary effects, of course. The other graph, which most dairy analysts will show, is the relationship between energy prices and dairy prices. And here we have the relationship between crude oil prices and the whole milk powder price and world markets, the New Zealand price or the Oceania price for whole milk powder. If you look back over the longer time series, then you'll see that there is a relationship between these prices, really because importers, some of the major importers tend to be the oil exporters, places like Nigeria, Middle East, North Africa, Indonesia, but also because world economic shocks and energy prices tend to impact on commodity prices and consumption demand patterns. So a long run relationship there. And we've seen that slightly in 2020, where you saw whole milk powder prices, but perhaps less than might have been expected. One thing that we're concerned about is that as energy prices rise and inflation rises in the economy, you'll see an upward pressure perhaps on commodities as production costs need to rise, and that will cause an upward pressure on milk prices globally. A key disruption that has happened and continues to happen as we recover from the pandemic, of course, is the increasing cost to logistics. Really started as an increase in costs at ports, where there was increasing checks on cargoes, increasing demands in terms of time spent in port, and that's caused container delays, but also the bounce in the world economy that you've had, where there's just an increase from demand side as a result of those government support packages throughout 2021. That's causing a really rapid increase in the cost of container freight. We've seen a cost of increase of over 270% over the last year. Not necessarily uniform around the world as well, particularly between Europe and Asia, where rates have been rising, to a lesser extent the Trans-Pacific and transatlantic routes, but beginning also to impact those routes. And we don't see those freight costs coming down soon. We also see that that causes delays of getting product into the market. So one of the longer lasting effects of the pandemic. And then finally in this section, just to talk about China. We've talked about a lot about China dominating world trade over the last year, not in all segments. So certainly the growth in Chinese trade has been around for the last decade. And since 2008, when you'll recall, there was a crisis around melamine, a contaminant that was being artificially used to enhance the protein level in milk, caused an issue in the Chinese market and opened the door for importers of infant formula, which was the contaminated product. You may recall that Chinese babies died as a result. And really, international exporters to China of infant formula have hugely benefited and exploited that niche. So companies like Nestle, Danone, Friesen-Campina, Mead Johnson, Abbott have premiumized imported milk powder in China, really through routes like Hong Kong, where they found it very easy to do business, and have built a really good trade in infant formula exports. That's beginning to change. The Chinese government and authorities have seen the profits being made by these players and have now set a target that they want 60% of Chinese infant formula to be supplied by domestic producers. And they're more or less at that now. They've made that change. So we've seen a drop in demand for imports as a result. You see sort of slogans from Chinese dairy companies that Chinese babies need Chinese milk formula and not imported milk formula. So the market is beginning to change. It's not only done that because of those policy changes, but also because Hong Kong, of course, has become a closed border over the last 2 years, and those companies that were trading a lot of milk through Hong Kong have lost the market as a result. And it's dwindled to practically nothing now. But another major issue looking forward is just less Chinese babies. If you look at the number of births in China, going back over the last few years, we've had above 18 million babies in China. Last year it was I think down to about 11 million as a result of the pandemic. So we're seeing a very rapid decline in the number of births, which haven't been helped by changing the one child per family policy. Most Chinese parents are still only looking to have one child, and what's really worrying from a Chinese point of view is just the number of mothers of childbearing age. If you look at the graph in the bottom left-hand corner there, number of women at peak childbearing age is declining as the demographic in China is declining as well. So very difficult to see that market returning, and that's a major loss out of the world dairy trade market. And the evidence for that is if you look at a company like Mead Johnson, the big American infant formula producer, bought by Reckitt Benckiser, a global consumer products company, a few years ago, and it has had a write-down of over $15 billion in the last 2 years, just as a result of the lack of the poor outlook for infant formula coming out of China. So looking at what the drivers of change looking forward will be, if we look at the performance of countries compared to their dairy consumption, you could easily form the view that generally economically rich countries can afford expensive animal protein. For countries like the EU, Australia, USA would tend to be higher consumers of animal proteins, both from a meat point of view and from a dairy point of view. And it's easy to see that as you get increasing disposable income, then dairy consumption will rise around the world. What we've done here is plotted the GDP, per capita GDP versus the per capita consumption of dairy, and we've regressed the line. You can see that Mexico is more or less on the average line. Most of India is well above the line as a traditional dairy consumer, consuming ahead of other countries, but also countries like Brazil and Russia and Turkey have a history of dairy consumption. Most of the growth in the market will come in trade, will come from those regions below the line here, or should where they can afford to buy more dairy, but haven't been buying up until this point. Perhaps confounded by Japan and Korea, which have pretty mature markets and are not seeing a lot of growth. So if we look at what drives dairy growth, the model here is really looking at the two drivers of dairy consumption. Some of that dairy growth is a function of population growth, just more mouths to feed, either in terms of absolute population size or just a percentage growth. And the other driver of growth is the change in per capita consumption. As disposable income rise, as you get a growth in the middle class, as you get an internationalization of diets, you get increasing expectation about diet, and also you get governments that are more willing to adjust tariffs and subsidize food within the population based on those expectations. So the two reasons really are per capita growth and population growth. And at Rabobank, we've built a model which I'll share the results with you, which really look at how those will affect dairy trade over the next couple of years. But first of all, good to understand how that splits down and how the model looks at where growth will come from. Key line here is the blue line, which looks at where population growth is greatest in the world. India, of course, continuing to have very rapid population growth, shown on the right-hand scale there, but moving down, the other main region for population growth other than Asia is now becoming Africa. So you see a lot of Asian and African countries leading the charge in population growth. Interesting that also you see USA in there, and you see continued progression of immigration into the USA, driving population growth there. And the columns on this chart are showing the growth, predicted growth over the next decade in dairy consumption, and going back to the model, how much of that is from population growth, shown by the blue lines, and how much of that growth is predicted to be increasing per capita consumption as a result of increased economic performance and disposable incomes. We can look at that in a different way. This is exactly the same graph with the blue line taken out, but with the ordered by growth in dairy, and you can see that India by far leads the world in terms of projected demand growth for dairy, and that will limit the amount of milk available for international trade from India. A lot of the focus needs to continue to maintain self-sufficiency and growth in dairy production in India. If you look at the other regions, as I said, we go through Pakistan and China and Asia. USA still a big demand growth. Brazil and the African states. Sudan is in there. Sudan is primarily an informal market, very little in terms of a formal market. Those are local projections on Sudan. We've left them in there for completeness, but we're rather dubious about Sudan's growth in dairy. If I exclude India and Pakistan as regions that are really focused on internal self-sufficiency, then you can begin to see where trade is going to be affected. And this is exactly the same graph, just without the distorting effects of India and Pakistan in there. Not all of the growth will be met by trade, but it's interesting to contrast, for example, USA and China on this graph, where a lot of the demand growth in China will be driven by increasing per capita consumption. Very little is being driven by demand by population growth, whereas most of the demand growth in the USA is being driven by that increase in population rate, and less so in a mature market that's already consuming a high per capita consumption of dairy. Will come from increasing the amount that people are going to consume. Another key thing to look at this, it's not just the per capita, it's not just the population growth we need to worry about, it's also the demographics of these markets. If you look at all of these regions, then you can see that their populations are getting older. If you look at dairy as a whole, it's as a rule of thumb, dairy consumption around the world and growth in dairy consumption will be driven by the population of individuals between the age of 0 and 5. Parents feeding children milk because it helps their bones grow, because it provides good nutrition for them. So dairy tends to be heavily driven by feeding of children. And in China, there's going to be less children over the next decade, a rapid growth in the population over the age of 50. US has been heavily impacted by the baby boomer generations, of course, and the second baby boom as a result of the first one. So they've got a demographic which is really being driven by blocks of individuals of an age, but certainly less growth in the under 20 market. Brazil also an aging population, Mexico getting older as well. It's interesting that consumption of things like whey proteins in the elderly will have an effect on healthy eating for the elderly. But really companies haven't focused on those markets and are only now beginning to focus on getting products in the market to meet the aging population needs. India also has, of course, a population that's getting older, as have Indonesia. If you want to look for the world's young, then probably Africa is the best place to go to. So East Africa and North Africa will become bigger dairy markets and will continue to demand dairy. We've talked a lot about China, and really to focus on the short term of China. Just to finish this story, China is of course the big importer of commodities, but has also been moving towards a developing market as well. They have had they've gone through the period of being a powder importer. They've gone through the period of partnering with global dairy companies. They're going through a learning curve very rapidly of the uses of dairy in the market. And over the last couple of years, the trend has been the growth in fresh dairy and liquid products. And you've seen we haven't looked at the figures for this, but we've seen a growth in the amount of ultra-treated or UHT milks going into China from Europe. And we've also seen an increase in cold chain logistics. So when you talk to people like Mengniu, one of the big Chinese dairy players, they're talking about getting fresh dairy into Chinese consumers' fridges and looking for fresh dairy sources. That's driven a renewed interest in investing in farms in China. Of course, China and India started in very much the same place 20 years ago in dairying, in that China had predominantly smallholder farmers, was predominantly 95% self-sufficient in dairy at one stage, has lost that since the early 2000s. It's about 75% self-sufficient, but they do have a focus from a government point of view on the mega farms. So they've been looking at investing in very large farms. Big two dairy players in China, dairy companies, Mengniu and Yili, have both invested heavily in dairy cows. Mengniu probably has upwards of 200,000 cows in China Modern Dairies, which it owns. Yili has Smart Health Valley Dairies, aiming to have 300,000 cows, and a lot of other very large dairy units that have been set up in China, really at the behest of the government, who are looking to have vertical integration, better control over food safety, and find that a convenient way of providing that. So if we look at the outlook for China and whether China will continue to dominate world markets, then we need to look at where the supply and demand picture in China is going to be. And the blue section at the bottom of this graph is our existing projections for China. We don't see that focus on large farms leading to rapid production growth in China. It's still very expensive to invest in those farms. Keeping that many cows is not without risk. You have environmental problems building up in disposing of the effluent from those farms. So we see that will be a continued focus, but we don't see that it's going to grow production that much, and production will remain somewhere between 30 and 35 million tons per year. We do see another scenario that if the government steps into China and insists on more local production, then that might rise as high as 36, 37 million tons a year. But we don't see that China will become self-sufficient in the short term, certainly not over the next decade. We see that demand will continue to rise, that we'll still get that demand gap shown by the circle on this chart. And that demand by the end of the decade from China will be somewhere around 57 million tons of milk, which will need to be met by continued imports. So feeding the world will continue to need dairy trade. Can't finish this section without talking about dairy alternatives. Dairy alternatives are a lot of noise in the market being made about dairy alternatives. You hear every day in the press that people are consuming either soy milk or almond milk or hemp milk or oat milk, and Oatly has just had its the Swedish alternative milk company went to an IPO in the market. It is valued at about 11 billion, even though that hasn't made a profit over the last, but it's never made a profit. So there's a lot of hype in the market driven by not only growth in these products, but also the sustainability concerns around dairy, or some of the sustainability concerns around dairy. And certainly that's the case. We see in markets like the US that there's about 8% share now of dairy alternatives coming from non-dairy sources. We don't think those are going to have a big impact on trade. Reasons for that are that a lot of those products are focused on fluid milk, and there's not a huge amount of fluid milk focused on, traded across borders. When we're talking about powders, the nutritional profile of a soy milk concentrate compared to a whey milk, a whey protein concentrate or a milk protein concentrate isn't as good. The amino acid balance isn't as good. And also there's a sourcing difficulty of where do you get hold of sustainably sourced soy or almonds. Most of the almonds in the world are produced in California, and it takes about 4 kilos of milk to produce a single almond, and therefore 4 kilograms of water to produce a single almond, and therefore sustainable sourcing of alternatives on a large scale for trade seems a little way off. So we don't see a huge disruption from alternative dairy products. What we do see a huge disruption from, and this is just a placeholder that talks about a current initiative being launched by the UN and the Global Dairy Platform around dairy becoming net zero. And we do see a major disruption coming from carbon and the fact that the dairy industry's footprint is quite large in greenhouse gases due to the production of methane by cows. There's a lot of pressure from governments to reduce greenhouse gas production, of course, at the moment, leading up to COP26. And you know, dairy produces about 1.5 kilograms of carbon per litre of milk. And the methane production means that it's an easy target to reduce short term, just because of the short methane life cycle, whereas fossil fuels remain in the atmosphere for a long time, and therefore it's a much slower transition. So a lot of pressure on livestock agriculture. And that will also be brought to bear on India, where because of the lower yielding cows, production there is about 6.5 kilograms of greenhouse gas per litre of milk. So you know, that will bring pressures which will change the world trade situation. And the way that pressure will be brought is really through finance providers like Rabobank, for example, where banks worldwide will be required by regulators to publish non-financial metrics in future, which will include scope 3 carbon greenhouse gas production. And scope 3 means further up the chain. So for each loan that is given, the bank will need to record the amount of greenhouse gas production that loan is likely to lead to. Banks are scrambling to do that worldwide ahead of the introduction by the regulators next year and in the next couple of years. And that will increase the cost of finance to those heavy greenhouse gas producers and have a production impact in dairy over the next couple of years, certainly in the intensive dairying regions. Having said that, although that's a negative against dairy, most of the major food models looking at over the next 40 years in dairy will show that dairy is a really essential part of the diet, and that we need to maintain production of dairy. The figures here are shown from the Lancet report, which came out of Harvard University, and shows that dairy is a major contributor to the nutrients in the diet, and particularly the macronutrients required by the human. There's another model come out of the Ridgett Institute, the Delta model in New Zealand, which shows exactly the same. So dairy is not something which is on a downward spiral because of the climate issue, but is need to find a balance between the two. Just finally, in the last few minutes, looking at how all of this will affect demand. And we have a model within the bank that we use to look at how trade will develop over the next couple of years. We first of all start looking at consumption, and our baseline is existing consumption in markets. We adjust that for population growth over the coming period, and look what that will do to demand. And then we have a team of analysts in each market around the world. Some of you might know Shiva Mugdil, who's our analyst in India. And each analyst will put an estimate of the per capita consumption change within their markets that they're covering in the projected period. We then feed into the model the existing production and the analyst's view on production growth possibilities. And that model gives a first cut of what the price outlook might be, whether there's upward or downward pressure on price. We then iterate the model several times in order to take account of the effect of prices. And eventually it gives us a view on supply and demand in the market. What you're looking at here on this chart is a demand forecast. On the left-hand scale there, we have the absolute demand in terms of billions of litres. On the horizontal scale, we've got what that means in terms of a percentage change in the marketplace. The size of the bubbles on this chart are the current market sizes. You can see that India is the largest bubble on the chart, by far the largest country consumer of dairy, but also the largest growing one, primarily driven by increase in per capita consumption over the coming period, but also continued growth in population. India, however, on a trade chart is often distorting because there's not a huge amount of trade as we've seen from India. So what I tend to do is just remove India from the chart. Excuse me for that. This is exactly the same chart. I've just taken India out to put a bit more definition between the other regions. And you can see that mature regions like the EU and Korea and Japan, where per capita consumption is already quite high, even the USA, there's relatively little growth and relatively impact on world demand in coming years. Where the demand is coming from is to a certain extent regions like Russia, China, South America, Mexico, but much more Asia, Africa, and Southeast Asia, Middle East, and North Africa, those regions that we've talked about. And that's where a lot of the focus on trade will need to be. We can then start to build a trade bridge. So we take our existing 2020 trade of about 85 million tons, and we can project trade to 2030, where we think there's going to be a continued increase in trade of about 3% a year necessary, looking at the figures that we've put in. And China and Southeast Asia will continue to be the dominant regions, increasing demand. More difficult is when we start building the export bridge of where that milk's going to come from and who's going to export it. We start the same position, of course, 85 million tons, but Europe will see some growth in export. But at the moment, we're seeing a lot more regulation on dairy farming in Europe, restrictions on growth in herds, restrictions on building new dairy plants, and most of the milk produced in North and East Europe is produced very intensively. So North and West Europe, is produced very intensively, and those regions are the ones that will be hit most by the new environmental regulations which are coming in. So limited amount of growth we can get from Europe. New Zealand, exactly the same is true. New Zealand is expected to have less exportable surplus as the country moves into a period where its other major export is tourism, and environmental constraints will be brought about to protect the tourist market and to make New Zealand preserve its pure image. And that will limit the growth of dairy, and New Zealand is pretty full as far as any dairy growth is concerned. So we don't see a lot of growth out of dairy in New Zealand over the next decade. USA has enough land and resources that USA will continue to be the driver of dairy exports, and have to step up to the world market to fill in the demand growth. The really interesting thing is the column on the right-hand side of the lower graph there, the 20.4 figure. And that represents a 20 million ton gap where we're not absolutely sure where that market growth will come from. It's not apparent from our analysts that anybody is stepping up to the mark to fill that. And that certainly will mean that the balance is weighted towards demand rather than supply. And of course, over the decade, that will have an upward pressure on prices, but also open the door to alternative protein sources which might be cheaper than dairy if production is limited. So just finishing off, I've got a couple of seconds left, I say, on the clock. Just to summarize what we've said, only about 10% of the world's dairy is traded across borders. Oceania is focused on exports. EU and USA, the other big export regions, it's more a case of disposal of surpluses. Pandemic to date has really been pretty minor disruptions in dairy, and the industry has coped remarkably well. If I ask around our bank's clients, it's not been as dramatic as we first expected. Demand from China has been the key message. It's really been elevated. China has supported world markets in terms of prices and demand, and dominates the demand for most dairy products. Supply growth from Europe and Oceania in the next few years will be less. USA will step up, need to step up to make that supply more balanced. And world trading dairy will continue to grow at about 3% a year ongoing, in a pretty stable fashion. What to watch? Well, interest rates, I think, and inflation are going to be the major things in the short term that are going to cause distortions. Mixed unlocking and even winding down of COVID restrictions in some of those import regions like Indonesia. COVID has had a major effect in the last couple of months and will continue to distort trade as a result. What the next steps in China are, will China return to lower inventories? Will Chinese economic growth continue? What's going to happen over the tensions over Taiwan? And of course, energy prices and what happens to shortages in the economy. I see that my time is more or less up, so I'll finish there. I don't know whether it's normal in these lectures to have questions at the end, but certainly if there are any, I'm more than happy to answer them. Or if you want to contact me later by email, that's also good. But thank you very much for the honor of presenting to you this morning, and I hope some of what I've said has been useful.
Thank you so much, sir. The session was really enriching, and thank you for educating us. Thank you so much, sir. Now I would like to invite the Associate Professor and Core Co-PI of NAHIPCA's project, Dr. Ashish Makwana, for vote of thanks.
Yes, it was very nice to hear from Mr. Kevin, and he has touched upon all the aspects related to the topic. If any questions are there before proposing the vote of thanks, if anybody has any question, yes, Dr. Samit.
Yes, Dr. Mr. Kevin, it's a wonderful talk. I think you have touched all the major important aspects in world trade. I would just like to have your insights on one aspect that as we are talking about the 20.4 million opportunity of milk equivalent. So how do you see that how India can play a role in that 20.4 million world trade opportunities in milk equivalent? What is your insights and what do you think?
Well, of course, we can talk a little bit more about India and what's happening in India at the moment. You're seeing a very rapid growth of the formal sector in India. You're seeing 15% of move into in many of the products, 15% growth of the formal sector per year, and I think that will continue. I think less so from the cooperative sector at the moment, which of course has been the major part of the formal sector. But you see a lot of entrepreneurs entering the market, and I think that will continue to happen as urbanization continues, but also those people see an opportunity of increasing dairy within the diet. So We do see, certainly for the next couple of years, that India's focus will remain internally to meet the demand growth that you see locally. That doesn't mean that there won't be exports to export onto the world market. And as India develops its supply base to have larger smallholder farmers, so moving from 2 to 3 cows to 20 cows to 25 cows, enables the use of extension services and genetics that will increase the yield per cow rapidly. And that's a really good thing from the point of view of greenhouse gas reduction. But that will create formal market availability of milk, which can then be used to focus on export markets. And I think particularly on some of the product ranges within India, such as paneer and ghee, where you've got a large diaspora of Indian people living in around the world. You've seen companies like Amul who've been able to develop export markets for Indian people in other parts of the world, particularly places like Middle East and North Africa, of course, where you've got a heavy Indian presence, but also in the USA and Europe. So I see it being a targeted approach of exports. I see India continuing to grow its dairy production, necessarily so to feed its population, because dairy is a very important source of protein, and that will offer some opportunities to fill that 20.4, but I don't see India becoming the major exporter in the world market for a good while yet, I'm afraid. But don't let me discourage you on that. If you'd like to produce more milk, that's good for me.
Yeah. Thank you. Thanks a lot.
Yes, anybody else has any question? Yes, Dr. Mahendra.
Yes. Hello, sir. Yeah, I am MD Gurjar, assistant professor in the Dairy Science College. I just wanted to ask one thing, that in your presentation, you said that most of the demand for milk comes from the under 20 age group, the proportion of the population which is under 20 age group. So that was one of the driver. And you also touched upon the alternatives, protein alternatives. So where you clearly highlighted that there is some hype over that, even the valuation were high and the companies were not even in the stage of profit making stage. So who are the consumers of this alternative? Where do they focus? Which age bracket do they focus? So just the profile of these alternative plant-based consumers. What would be the profile of these consumers?
Okay. First of all, I apologize if I said that it was predominantly 0 to 5-year-olds. Of course, that's consumption goes across the population. But if you look at where growth is occurring, it's often in places where people have an interest in products for children, if you like. And that's where a lot of dairy marketing is focused, and school milk projects often will be used to increase demand. So if I said that it was predominantly 0 to 5-year-olds that drink milk, then I apologize for that. That was probably a slip of the tongue. On the dairy alternatives have been driven by particularly come, I think, from the fluid milk sector. So markets that are heavy in fluid milk. And fluid milk's been a very difficult product. You've seen in most markets around the world, they were heavily supported by governments in the 1950s, following World War II in Europe and the USA. A lot of government support for marketing fluid milk. So fluid milk consumption rose above the norm, if you like. But fluid milk for dairy companies is often a real problem product. I mean, it's low margin, it's fresh and perishable, so it has a high logistics cost. Often you have to deliver direct to the retailer rather than through a distribution center. And from a consumer point of view, people have found alternatives. So fluid milk consumption in most markets around the world has been declining. And if you look at the general trend of dairy, people have moved from fluid milk to cheese. If you look at something like the US market, all of the growth in dairy is coming from cheese. Fluid milk's been in demand until the pandemic, and then you got a bounce back. So Dairy Farmers of America, who bought Dean Foods 18 months ago, have been very pleased by that acquisition. They bought it in order to maintain the market for volume milk, but actually they've made good money out of it. But fluid milk is a low margin product, and people have come in with alternative products that are just different. So almond milk, soy milk, and you can appeal for that because you can say, well, you know, milk contains a lot of fat, and these products can help you with your diet. You can these products have a lower environmental impact. And they're different, and they're something novel. And I think you've seen a growth of those markets, particularly led from the USA. And you had White Wave, who were the big producer of Silk, the big alternative milk brand there, were owned by Dean Foods. Greg Engels, the guy who built Dean Foods, famously said that he loved being in the dairy case, but he didn't really want to be in dairy because he had to deal with a supply chain that was very difficult to deal with. Supply chains and production costs of alternative dairy products tend to be lower. And you've seen a growth in the US market. Danone, of course, bought White Wave off Dean, and Dean ran into financial problems and has been really growing alternative dairy around the world. The problem that Danone have is Danone's environmental credentials and sustainability credentials are very high. They're a B Corp in the States, very high. They set themselves very high standards, and they're finding it really difficult to find a sustainable supply of soy and almond and oats that meet those standards. So growth is being limited by supply, not demand. People like Oatly have moved in and have got growing demand, really based around their environmental credentials, but again, finding those supply chains difficult to build and rely on. So the typical consumer tends to be an affluent consumer, tends to be somebody who is looking for something different in their diet, not necessarily someone who's looking for a high quality protein in the diet, which is more important in a market where you've got people who are trying to move out of a plant-based diet into a better quality protein diet. So you'll see less impact in places like Southeast Asia, where people are looking to include more dairy to get a better quality protein.
Yes, thank you, sir.
Okay. Thank you, sir. With this, we finally come to the end of this particular nice, knowledgeable lecture series, lecture session delivered by you. And I am here to propose vote of thanks. First of all, I am very much thankful to Dr. K.B. Kathiria, sir, Honorable Vice Chancellor of Anand Agricultural University, for providing very valuable guidance since inception of this project. I am also thankful to Dr. R.S. Pundir, sir, for leading and guiding all of us in right direction for successfully organizing this program. I extend my heartfelt thanks to Dr. Samit Datta, core co-PI of this group, for doing all the hard work associated with organizing this program. I also extend my thanks to Dr. Yogesh Lad, Dr. Mahendra Gurjar, and Ms. Visita Khanna for helping me by extending their proactive support. I also specifically thank Mr. Divyang and Ms. Kripali for doing really hard work and doing all the tasks entrusted to them at right time. At the same time, I also extend my thanks to all other organizing committee members and program coordinators from NAHEP CAST project associated with this training program. It would not have been possible to successfully organize this program without wholehearted active support of speaker and viewers. Thus, I am very much thankful to our speaker, Mr. Kevin, for delivering very nice lecture appropriate to the theme, and also to all the participants, specifically PG students of Dairy Science College and Vidya Dairy students for taking the advantage of this nice lecture. At the end, I thank one and all who have directly or indirectly helped us to successfully organize this program. Thank you all.
Thank you.